All right, guys, welcome back to the channel. I'm going to dive straight in and I'm going to show you an opportunity using two phenomenal tools that will allow you to build an edge and look at real high probability setups. I've had a lot of questions about gold. We've got some FOMC, some Fed interest rates and stuff coming out at the moment. I don't quite know what's going on because I'm not following it actively at the moment. I'll catch up in about 20 minutes until the announcements. But I want to dive in and look I'm keeping an eye on the markets right now, and what I'm looking at is the behavior in price. Because if you look at gold, if you just go out on a higher time frame, let's just say we go out to the monthly, right? You can see that this is an all-time high, right? So we're at an all-time high for gold, and we've been bullish for quite a while. And you know, we know these things don't go on forever, and there's nothing really to compare it to looking left because we're at an all-time high. If we go out to the weekly time frame, you can see we're clearly at an all-time high on a big bullish run, right? So what I'm looking at primarily is just technical analysis. I'm looking at price action because you know, you can't keep buying this forever. And as a trader, I'm looking to make money, and that means making money shorting the market as well as buying it. And although we are in a bullish run, it's likely to have a retracement. Okay, so what I'm looking at is how price is behaving. The first thing I'm doing is looking at the chart, and I'm using my technical analysis skill to give me clues that market is likely to see a little correction. And the first thing I can see, following this flagpole here, is this ascending channel, right? So we've got this ascending channel that's kind of running out of steam. We've got this nice divergence here on the RSI. This is a weekly time frame, by the way. Tell you what, let's go to the 4 hour just to make it nice and clean for you. What I saw just now was this rejection. Okay, so we had this big rally to the upside. And basically what that means is during whatever announcement's coming out right now, the FOMC, the minutes, and we saw the bulls really try to take charge in this market. And we're now seeing a big rejection, okay, which is forcing this into a V-top, a double top situation where we've got previous test being massively overbought, okay, and then we've got that divergence on the RSI. We've got the same with the MACD, and we're seeing this rejection. So whenever we see a rejection like that, that's another clue. Now looking left here, just recently, since like end of August time, we had this really strong level respected resistance. We had this ceiling here that was respected once, twice, 3, 4, 5, 6, 7, 8 times, and then we blasted through that. So if we're to short this, then I wouldn't want to short beyond this point, because as a trader, I want to take my money at the highest probability profit zone, and I want to get in and get out, and I want to get on to the next opportunity. I don't want to be greedy and shoot for the moon, you know, roll over this thing and ride it all the way down. But what I am looking for is a really high probability setup for a short. Now, already I'm seeing a nice confirmation in price that we're likely to roll over. But what I want to show you now is I want to combine that with Forecaster. So in Forecaster, what I'm going to do is I'm going to take a look at the same market. Okay, so we're going to just take a look at exactly the same market that we were just looking at. And first thing I'm going to do is I'm going to check out the seasonality. And the seasonality is going to tell me is over the last 3 years, 5 years, we can add on the 15-year in there as well. It's going to tell me what the movement in price was, okay? What the seasonal move of price was at this particular time of the year. And you can see we're right here on today at the 18th. Now, look at this. If you look at the correlation here between the 3-year, 5-year, and 15-year, between the 3rd of September to the end of September, it's been bearish, okay? And if I was to draw that on there and just draw that zone right to the end of September there, you can see that if we drop that to a short position, 100% of the time in the last 3 years, between now or between the beginning of September and the end of September, it's been bearish. 100% of the time in the last 5 years, it's been bearish, and 73.3% has been bearish over the last 15 years. That's pretty good, right? Now, if we just shorten this down to today, so let's just say we want to go from today, okay, to the end of September. Right, let's just say here, 29th. Short position, 100%, 100%, 60%. That's still really good odds, okay? So what I like to do now is drill down a little bit further. Today's Wednesday, and it's Wednesday the 18th of September at the time of this recording, so there's nothing I can hide or skew. This is live. This is, 7:47, 13 minutes from the next announcement. What you'll see is on the Wednesday here, right? So first of all, let's look at the daily averages. You can see on the daily averages what we're on the monthly averages, right? So September, 100% short, 100% short, 73% short, all through September. Now we look at the weekly, and you can see today's Wednesday, and it's 75, 86, 67, all short. So today, if you was to optimize for shorting, today looks like the best day. And when you compare that with price action and what's happening right now, that gives me a lot of confidence. Now, I want to show you one more thing, and that's the quantum screener. The quantum screener here, if we jump onto the quantum screener and go to commodities, okay, look at that. In the top 4, we've got the gold. Now, what this is saying is between the 19th of September, which is tomorrow, if you was to hold this until the 17th of December, the correlation score is 91.91% over the last 15 years for a short position. Win rate, 60%. Average return, 6.2%. That's a decent return, right? Now, if we jump out to that again, we can also obviously tighten that down a little bit as well. So you don't have to take it to the end of December. You could just take it to the end of September, right? And either way you look at it, that is a pretty good correlation. 91.9% over the 15 years. You've got 2.5% there, just in that small period there. That is not a bad confirmation of a short bias. Wednesday, 65%. So pretty good, 73% through September. Look, it's about as best as it's going to get. So when I'm talking about identifying opportunities that are live right now, this is what I'm looking at. I'm looking to capitalize on these one-offs that you will only know about if you're familiar with how to use these tools and how to use your technical analysis ability to give you confidence to get you in the trades. So I hope that's useful. Let me know in the comments what you're looking at as well. If you haven't got Forecaster, it is a must-have tool for all investors and traders, in my opinion. I'll stick a link for Forecaster down in the description of the video. Obviously, you guys know about TradingView as well. And if you haven't checked out my videos on TradingView and Forecaster, I've done other videos on this. One where I took a trade on PayPal or investment on PayPal. One where I used it for dollar yen. And also I've done a whole beginner's guide for TradingView. So go and check those out, and I'll see you in the next one.